Hello everyone. In the last video, we learned about accounting treatment of revaluation of assets and reassessment of liabilities by opening revaluation account. Now in this video, we will learn about accounting treatment of revaluation of assets and reassessment of liabilities without opening revaluation account. And without opening revaluation account, treatment will be given when partner decides not to show the assets and liabilities at its revised values or altered values. In this case, the treatment will be given by passing a single journal entry, and the entry will be gaining partners capital account debit to sacrificing partners capital account. We can understand this statement with the help of a question. This is the question number 42. In this question, L, M and N are partners sharing profits and losses in equal proportion. On 31st March 2016, their balance sheet was as follows. And if we observe the balance sheet, we have reserve and surplus in the liability side of balance sheet. After the balance sheet, the partner decide that with effect from 1st April 2016, they will share profits and losses in the ratio of 4 is to 2 is to 1. That means 4 is to 2 is to 1 is the new ratio and earlier given ratio. Equal proportion, this is the old ratio. For this purpose, goodwill is to be valued at 2 years purchase of the average profit of last 4 years, which were, and these are the 4 years profits or loss given in the question. They further added that provision for doubtful debts be increased by rupees 2000. We have to increase the provision by rupees 2000. That means loss for the firm. Stock be appreciated by 20%. Appreciate karna means increase karna. That means profits for the firm. And fixed assets be depreciated or decreased by 10%. That means loss. Creditors be taken at rupees 49,000. And in the balance sheet, creditors are given at rupees 58,000. That means decrease in the value of creditors by rupees 9,000. This is the decrease in liability. That means profits for the firm. Partners do not desire to record the revised values of assets and liabilities in the books. Now this is the main information on which the treatment is based. The partners do not desire to record the revised values, and whenever this information is in the question, that means we will give the treatment by passing adjustment entry, that is gaining to sacrifice. They also desire to leave the reserve and surplus undistributed. हमें रिजर्व एंड सरप्लस को भी अनडिस्ट्रीब्यूटेड रखना है, मीन्स डिस्ट्रीब्यूट नहीं करना. दैट मीन्स अगेंस्ट द ट्रीटमेंट ऑफ रिजर्व एंड सरप्लस इज सेम, गेनिंग टू सेक्रीफाइस. You are required to give effect to the change in profit sharing ratio by passing a single journal entry. When the requirement is by passing a single journal entry, it means whatever the information given in the question, you have to pass a single entry for all these. We have goodwill in the question. We also have reserve and surplus. We also have revaluation of assets and reassessment of liabilities. For all these, we have to pass a single journal entry, that means gaining to sacrifice, and also prepare the revised balance sheet. Now see the solution. There are three partners given in the question, L, M and N. Their old profit sharing ratio is 1 is to 1 is to 1. The new profit sharing ratio is 4 is to 2 is to 1. Now as per the information given in the question, we have to increase the provision for doubtful debts by rupees 2000. This is a loss for the firm. That's why within bracket, क्योंकि कोई भी loss की जो फिगर होगी हम उसे within bracket show करते हैं. There is increase in the value of stock by rupees 36,000. There is decrease in the value of fixed assets, loss 22,000 rupees. There is decrease in creditors by rupees 9,000, and final the result of revaluation is 21,000 rupees positive amount. That means profit on revaluation. Now the goodwill is, we have the information given in the question. Goodwill is to be valued at 2-year purchase of the average profit of last 4 years, and we have given 4 years profits, 20,000 loss, 48,000 profit, 60,000 profit and 80,000 profit. It is total 80 plus 60, 140 plus 48. 188 minus 20, 1,68,000. So 1,68,000 divided by 4. 1,68,000 divided by 4. It is 42,000 rupees the average profit, and number of your purchases 2. That's why 42,000 multiplied by 2, the value of goodwill is 84,000. So the goodwill is now 84,000. Given reserve and surplus. Reserve and surplus in the question is 42,000. That's why reserve and surplus is 42,000, because the requirement of the question is pass a single journal entry. We can pass the separate entries for these, but as per requirement we have to pass a single entry. That's why first of all we will add all these amounts. Now 1,47,000 is the total adjustable amount. Now we have to pass the entry gaining to sacrifice, and to pass the entry gaining to sacrifice, first of all we will calculate individual partners gain or sacrifice. That's why first of all else gain or sacrifice, and we are using here the formula of sacrificing ratio, old ratio minus new ratio. L old share is 1 by 3, new share is 4 by 7, LCM is 21, 3 7s are 21, 7 1s are 7, 7 3s are 24, 21, 3 4s are 12, 7 minus 12, 5 by 21, because this is the positive amount and we are using the formula of sacrificing ratio. That's why this is the negative amount, minus 5 by 21, and we are using the formula of sacrificing ratio, and negative amount stands for gain in the case of sacrificing ratio. In the same way, M's gain or sacrifice, M's old share is 1 by 3, new 2 by 7, and the result is 1 by 21 positive amount. That's why sacrifice. N's gain or sacrifice, old 1 by 3, new 1 by 7, and final amount is 4 by 21 positive amount. That's why sacrifice. And we know that total sacrifice is always equal to total gain. Now the entry is gaining partners capital account debit to sacrificing partners capital accounts, because L is the gaining partner, M and N are the sacrificing partners. That's why the entry will be L's capital account debit to M's capital account and to N's capital account. और हमें जो ये अमाउंट लिखनी है इक्वल टू द proportion of their gain or sacrifice in the total adjustable amount. Total adjustable amount is 1,47,000. That's why 5 by 21 of 1,47,000. This is the L's gain 5 by 21. That's why L's amount is 35,000. M sacrifice is 1 by 21. That's why 1 by 21 of 1,47,000, 7,000 rupees. N sacrifices 4 by 21. That's why 4 by 21 of 1,47,000, that is 28,000 rupees. This is the treatment of revaluation profit, goodwill and reserve at the time of change in ratio. Now the second requirement of the question is also prepare the revised balance sheet. It means we have to maintain the balance sheet. We will maintain the balance sheet according to the balance sheet given in the question. Only we have to show the effect of this journal entry which we passed as the solution of the question. हमें केवल इस एंट्री का इफेक्ट दिखाना है बैलेंस शीट पर, एंड दिस एंट्री विल इफेक्ट ओनली द कैपिटल अकाउंट ऑफ द पार्टनर्स. Else capital account is debited. That means else capital account will be decreased by 35,000. In the balance sheet, L capital is 2 lakh. Now it is decreased by 35,000. So 2 lakh minus 35,000. That's why in the revised balance sheet, L's capital will be 1,65,000. M and N's capital will be increased by rupees 7,000 and 28,000. M's capital is 1 lakh plus 7, 1,07,000, and N's capital becomes 80 plus 28, 1,08,000. So this is the status of M and N's capital account balances. Total capital of the firm will be the same because there is a mutual change between the capital account of the partners. Rest assets and liabilities will be the same as given in the questions balance sheet, and final the balance sheet total will also remains the same if the treatment will be given of bypassing an adjustment entry or without opening revaluation account.